Have you ever wondered what happens to personal loans when a borrower dies? This crucial question affects many families and can significantly impact their financial stability. When a borrower dies, the fate of their personal loans depends on the type of loan. Secured loans, such as those tied to collateral like a car or house, allow the lender to repossess the asset to settle the debt. Unsecured loans, which include personal loans without collateral, are typically settled from the deceased estate. If the estate's assets are insufficient, heirs may not be responsible unless they co-sign or are otherwise liable. It's essential to understand the responsibilities of an executor if there's a will. The executor manages loan repayments from the estate's assets. Contrary to popular belief, loans aren't automatically forgiven upon death. Repayment remains necessary. In some cases, a personal loan when someone dies cannot be simply written off, and there are procedures that lenders and borrowers must follow. A deceased person's estate, which includes cash and everything of value that belonged to the deceased, is used by an administrator or executor to settle any unpaid debts. If the estate can't cover the debts, it is considered insolvent and assets are sold to pay off the debts. Loans are categorized as either secured or unsecured debts. A secured loan is tied to collateral such as a car or house. Unsecured debts include credit cards, personal loans without collateral, student loans, and utility bills. If there was a co-signer on a personal loan, then the co-signer is responsible for the remaining balance when someone dies. If there is no co-signer or other financial backing, the deceased borrower's estate is responsible for paying back the loan. The estate usually pays off auto loans, but if the estate is insolvent and an heir doesn't want to assume the auto loan debt payments, the lender repossesses them. Regardless of whether the spouse's name is on the loan, the spouse is responsible for the debt going forward. Some state laws may require a surviving spouse to pay the debt acquired by the deceased during the marriage. For joint credit card accounts, the spouse is required to continue paying off the debt. If there is no joint account, then the credit card company usually writes off the debt if the estate can't cover the outstanding balance. Authorized users must not use the card after the person dies, as doing so is considered fraud. If you borrowed against your home's value through a home equity loan, the person inheriting your home would be required to pay it back. The rules regarding medical bills after someone dies vary state by state. A spouse may be responsible for these debts depending on the payment agreements signed at the time of hospital admission. Some states have law making children liable for their deceased parents' long-term care debt. If it is a joint mortgage, the mortgage transfers to the spouse when a husband or wife dies and becomes the spouse's responsibility. If the deceased mortgage holder is the only one listed on the deed and there's no will, the home becomes part of the estate. Federal student loans are usually written off if the borrower dies, while private loans used for college will go through the probate process. Unless there's a co-signer, if there's not enough money to cover the loan balance, it is usually written off when a person dies. The best way to protect loved ones from personal loan liabilities after death is through a will that specifies how the assets will be distributed. Except in the case of joint accounts and loans, it is illegal for debt collectors to ask surviving family members to pay a deceased personal loans. Creditors can't go after accounts with living beneficiaries such as life insurance, retirement accounts, and trust. With education and careful planning, a family won't be left asking what happens to personal loans when a borrower dies. In today's banking landscape, acquiring loans has become more accessible, with many banks offering online facilities for various types of loans, including home loans, business loans, and personal loans. However, amidst this ease of loan procurement, be aware of the rules governing loans repayment, especially in the unfortunate event of borrower's untimely demise. Thanks for watching the video. Please like, subscribe.